welcome to this month's episode of Fintech Firebrand. I'm Virginie O'Shea, founder of Firebrand Research, and I'm here to chat to you about this month's fintech and finreg news. Now, it's been a month of AI discussions again. There's been a lot of commentary and regulatory interest in AI. Frontier AI, as they're now calling it, is front of mind with regards to Anthropic's Claude Mythos model. So there's been a lot of discussion internationally on that topic. In the UK, the FCA and the Bank of England have both been talking about it. We've seen some of the Chinese regulators, also the Hong Kong regulators, looking at access, and Singapore as well have commented on it. As yet, only the US has access to the model. The US government has deemed it a security threat, so they have not been sharing the model outside of its own domestic borders. That is a bone of contention, and regulators are keen to assess how Mythos might impact its financial services community, its wider governmental community, and security and cybersecurity as a whole, because Mythos apparently is able to help potentially cyber criminals, but also banks detect any weaknesses in existing cyber security systems. So definitely, I mentioned it last month, this is going to be continuing to be a topic throughout this year. We've also seen some interesting developments with regards to Anthropic IPO and the possible valuations for Anthropic once it goes into public circulation, as it were. On that note, we've also seen the largest IPO in NASDAQ history, or potentially in history, full stop, with the SpaceX IPO going live this month also. Lots of interesting numbers with regards to trillions of investment dollars going towards that particular fund. And it's also, well, those assets, I should say. And it's interesting to see now that Elon Musk has become a multi-trillionaire as a result of all of this investment. The SpaceX itself has surpassed Amazon in terms of valuation, so certainly will not please Jeff Bezos. I imagine there's going to be some moves there. Also interesting to note that SpaceX's mission is to land successfully on Mars in the next few years, which possibly is a pie-in-the-sky investment, but the exposure of lots of different assets across the US market and beyond to some of the risks that are posed potentially by those assets will be interesting to see, particularly with regard to retirement assets. So definitely lots of topics of interest from the finreg front as well as the market front. When it comes to finreg related to AI, we still haven't got confirmation as to whether the EU AI Act, which is due to come into force in August, is actually going to be delayed. There apparently have been some discussions at the European level about this topic, although there has not been universal agreement on what should happen. It's largely because there is interest in building in more frontier AI considerations into the existing framework. But we have also seen international regulators talking about different AI frameworks too. IOSCO, for instance, published a supervisory toolkit for capital markets this month. And it's looking at how to assess things like governance and risk management, third-party risk assessment and disclosures related to record keeping and reporting for AI and AI usage in various aspects of financial services. So definitely there is a lot of interest in that particular topic, and expect that to run throughout 2026. Another big discussion point, as it's the sort of deadline is closing in with regards to the extension to 23/5 trading within the US. Now, there's a lot of discussion about whether the market data aspects of the preparations will be ready. The SIP will be ready in time for the deadline, but even if that slips, it may be just the end of the year or the start of next year potentially. But there's also been a lot of international interest in that topic as well. There's been discussion in Europe about whether the model would apply here, for example, though only apparently LSC is the only one to be doing sort of an official consultation or examination of that particular topic. IOSCO, again, has been looking at the topic itself and has issued a report on extended trading hours for equity markets, looking at the different impacts and the benefits and risks of extending those hours. There are obviously more cross-border risks than you would assess. And there's also going to be liquidity impacts and price impacts on international investors that are trading out of US hours potentially. It obviously at the moment is much more costly not to trade within US trading hours, or conventional trading hours, I should call them. So it'll be interesting to see whether the extension changes that dynamic in any particular way. But definitely, again, another topic to see evolving this year. On the ongoing EU T+1 preparation standpoint, we have seen a new consultation from ESMA this month looking at the protocols for communication during the allocation and confirmation process. So assessing some changes to the technical standards as they currently stand, or the RTSs, with regards to how those are classified, because at the moment it's a little grey, I guess, and it is rather than being mandated, it's a recommendation. So it would make the language much stronger with regards to the types of messaging standards you can use when confirming or allocating trade, settlement information. So by making that much more crystal clear for the industry, the hope is that more automation will ensue rather than using emails to exchange information, getting rid of spreadsheets and improving that process overall. So definitely interesting to see the industry feedback on that point. Another one of my favorite topics, operational resilience, and DORA, the FinReg or Fintech Explorer, as I call it, the Digital Operational Resilience Act, which it went into play last year in January. We've seen the first report from ESMA that details all of the ICT incidents that were reported under the banner of DORA during 2025. It highlights, I think, around about 3,000 different, or 3,800 or so different incidents that have been reported. Lots of them relatively small, one would think. So maybe they will have to change the tolerance levels, because the majority did not have a major impact on clients or the market at large. So certainly maybe some recalibration for DORA from the regulatory standpoint will be interesting to see. But it also highlights what the underlying causes that we've seen so far. The majority have been to do with third parties and operational incidents that are not to do with cybersecurity. So only around 10% of those incidents, the ICT risk incidents, were related to cybersecurity. So relatively low, despite the fact we are seeing an uptick in cyber attacks across the board. Thankfully, they have not been significant or material in the main for most of the financial institutions reporting under DORA. But it's interesting to see that the high level of cross-border activity, around about a third of those incidents were related to cross-border activity. So definitely something that needs to be coordinated at the European level. So lots of interesting developments, no doubt, from firms and regulators looking at the DORA data and the further tweaks to the regime as it continues on. Operational resilience, obviously, along with AI, very interrelated topics. So we expect much more discussion on those as we go forward. Now, one of the I guess my final thoughts are on some of the relatively contentious topics in the US as the major regulators, especially the Securities and Exchange Commission, the SEC, changes its priorities. There has been a significant pushback from the investor community about the SEC's official proposal, which came out this month, or late last month rather, related to reporting or corporate reporting going from quarterly to biannually, so only twice a year. So reducing the information by half for investors throughout the annual period. Now, less transparency in the market is generally not that welcome. So certainly that is something that has seen a lot of pushback. We've also seen the SEC look at removing the trade-through rule. I think it's Rule 610 and 611. It's reviewing the removal of. Again, those are related to best execution for retail investors. There's a lot of concern that removing or significantly changing that regime will have poorer outcomes for the investor community, the wider investor community in the US. So definitely interesting to see this reprioritization. I know that the deregulatory environment in the US has evolved significantly over last year and a half, I should say. And some things are, sensible to be removed, others maybe not so. We've also seen the ESG, unsurprisingly seen the ESG rules rescinded by the SEC, as they believe it is outside of the purview of a financial regulator. That is not the tactic that's being taken in other countries, I would stress, or other regions. Most of Asia and Europe are pushing forward with ESG related reforms and are pushing forward the sustainability agenda. In fact, it's interesting to note that some of the geopolitical incidents, the risks that have happened this year, are prioritizing investments in sustainability is a sort of has been positive. So we've seen positive uptick in clean tech investment and returns for investors in that particular area. But that aside, it's interesting to see what will happen, whether the SEC will listen to the pushback from the industry. I think it's not just the investors themselves. Some of the industry itself has also raised concerns about some of these changes. Definitely in the previous Gensler era, there was a lot of pushback on regulation. This seems to be pushback on deregulation. There needs to be some sort of middle ground between the two, but definitely some dynamics that the rest of the world will be monitoring. Definitely something that investor groups will continue to prioritize this year. I don't expect other jurisdictions to follow suit on some of these things, largely because there continues to be a big focus on increasing retail investment across other markets, particularly in the EU, as part of the competitiveness focus and the Savings and Investments Union. There is a big push around retail investors. You want to make them feel like they're empowered, not reducing their power, one would assume. But and it's also interesting to note as an aside, the SpaceX IPO, Elon Musk retains 80% of the controlling shares of that organization. So actually, even if you are investing, you cannot hope to influence what happens in the direction of the company. So corporate governance standards and changes are definitely something that people need to get better educated upon.